as traders, as investors, all you can do is play the probabilities, right? You continue to look at the evidence, at the data points, and you work with what you've got. And although the market hasn't fallen yet, John, the data continues to mount. The evidence continues to build. Now, I saw an interesting research note from UBS this week, John, which made a comment on the weighting of the Mag 7 in the S&P 500, and it breached 34% for the third time. And there's been examples in the past, John, from 2021, 2022, and over the last year, when the Mag 7 exceeded 27.5% and 34% respectively. The index had a short rally, but then it rolled over by about 13% over the next 2 months, John. And that's a number, that 13%, that would fall into the correction category. I think it's a realistic, perhaps, expectation of what could happen, John. What do you think about what UBS here is saying about the Mag 7 weighting?
Well, I kind of want to reiterate what you've been saying and what we've been saying for weeks, right? I don't want to be a Debbie Downer. I mean, obviously we all want to be bullish of the market, but I kind of feel like I'm standing in the eye of a hurricane and I'm looking up to sky blue, but all around me, I see all this swirling evidence that something bad is going to come. And so this data point to me is just another one that I talked to you about earlier in the week in our production meeting, was that the equity risk premium, the expected return of equities to the risk-free rate, in this case, let's say the 10-year note, is at zero. And that has also preceded major corrections in the market. So it's just another piece of information that is not signaling that the market is going to go higher.